Joining me now, Brett Sheely, Head of ETF Specialists at AllianceBernstein. Brett, thanks so much for joining me at the desk.
Thank you for having me today.
So we have seen really impressive returns from U.S. stocks. Fourth quarter is historically the strongest quarter of the year, and you're telling us that we should be investing internationally. Make the case. Why should we be putting money abroad?
Well, you know, it's been a really strong year for U.S. stocks. It's also been a very strong year for international equities. And so if I actually think about performance year to date, we see that international equities have been outperforming pretty sizably relative to the U.S. equity market. Now the question really becomes, like, is it already baked in? And I think the answer to that is we don't believe so. We believe there's still room to run within international equities for many reasons.
Looking out 12 to 24 months, what is your bull case for international stocks?
So I don't have a number to give you, but what I can tell you is that there are a number of catalysts that are taking place right now that are unique to this period of time, and we still see those running forward. I'll give you a couple examples. So if we think about what's occurring in Europe today, we see a number of catalysts, right, within the European markets for equities. One of those being, for example, defense spending, right? We see that NATO members are coming out and saying, okay, we've been having to hit our 2% of GDP target for defense spending. Traditionally, we weren't there, but since 2014, they've kind of doubled their defense spending and they're there. But now the EU's coming out and saying we actually want to hit more of like a 5% of GDP target for defense spending. That means additional stimulus being put into the market. So that's one example. But even if I think about the ECB and rates, we've seen that the ECB has really kind of led the U.S. in terms of rate cuts. So they've brought, their lending rate down by half, right, in the past year. And now we just see the U.S. start to pick up there. So between, stimulus, rate environment, we really think there's like a number of different catalysts kind of promoting international equity investing.
That's specific to Europe. What about other international markets?
That's a great question. So, I'll give you another example. If we think about Japan, right? Let's take it to Asia. If we think about the Japanese market, within Japan, we've actually seen a change in sort of governance, right? And not to get too kind of in the weeds on this, but, there were structures within Japanese investing where you saw companies sort of investing in each other. We're seeing that start to go away. What does that mean? It means that there's a more kind of market-friendly, competitive environment in Japan within the Japanese equity market. Like, that's different. And if I think about also within APAC, China, right? A huge component of emerging market investing. We see that the Trump administration and the Chinese government are coming together and thinking about how they can, work out a deal there. I think that's a kind of an open question, but sort of leading towards a yes at some point. We would expect that. So I think that there's a number of kind of catalysts outside Europe that are also supporting this.
So the catalysts are there, but what if I'm an investor and I'm like, but U.S. big cap, large cap tech is doing so well. Why diversify if that's maybe what I know and I'm more familiar with? So maybe speak to the importance of diversification, especially if the market does get choppy.
Yeah, and I wouldn't tell everyone to sell all their tech today, but I do think there's more room for international equities today. And I think about diversification as a key point, right? You said the word. I think you kind of nailed it on the head. If I look at the S&P 500 today, the 10 largest names within that index account for like 40% of the S&P 500. If I look at the EFA index, right, so non-North American companies, and I look at the top 10 largest names within that index, it's more like 10 to 15% of the index. Like, there is just such concentration within U.S. large cap equities today. And if anything, that concentration is growing. It's not reducing. And so if you want to think about diversifying your portfolio, international equities is a great way to do it.
And despite the fact that we have seen outperformance in some of the international markets this year alone, they're still trading at a meaningful discount to U.S. stocks. Do you expect that gap to close then?
I mean, we could, right? And so it's interesting, if you look back over the past several years, European stocks and international stocks have been trading at a discount to U.S. stocks. So that's not necessarily new, but I think the magnitude of that discount has grown. I mean, we're at like a 20-year, we haven't seen discounts this high within the past 20 years, right? International equities are trading at something like 30-ish% discount relative to US equities. So there's something there.
So talk about the best ways to do this. Talk about the best ways to put money to work abroad.
Yeah, so I think there's a number of different ways that you can invest in international equity markets. I mean, at AllianceBernstein, I spend my time talking to clients about different ETFs that we offer. We have several in that space. As sort of like our core international equity product, we have the ticker ILO, ILOW, listed on the New York Stock Exchange. That product really provides about 90% upside capture, 70% downside capture, and really focuses on three things. That is quality, stability, and reasonable price point. So that is sort of a core building block that you can use within your portfolio. Outside of that, if you're more of a growth investor, we recently launched on the New York Stock Exchange the AB International Growth ETF, IGGY, I-G-G-Y, not Iggy Pop, but that is much more of a pure growth focus. Great team behind it with over 15 years of experience in that space.
What's the most overlooked opportunity right now when it comes to international markets?
Yeah, that's a very good question. I think that if I don't think about it from like a sector play, because I think we could spend some time talking about that. I actually, I'm a strong believer that the emerging markets are kind of an interesting opportunity right now. I think a lot of the tariff uncertainty has been priced in. We see, again, as I mentioned, the Chinese coming to the table in terms of trying to cut a deal. We see the US dollar weakening, which bodes well for emerging market economies, many of whom are financing their businesses in US dollars. They're getting essentially like some debt relief, right? Just because of the FX. So I think that's a really interesting part of international markets to look at today.
Okay, and then just kind of final takeaways for investors who maybe now understand the importance of diversification, understand the importance of putting some money to work abroad. What's your best advice for them as they kind of think about adding this to their portfolio?
Look, I think about risk management, right? It's not like always the most exciting thing to talk about, but I think it's critical. Like when you are looking at your total portfolio, you need to consider all of your risks, and diversification is going to help you balance out your risks. And without realizing it, you're probably more exposed to US large cap names than you anticipated. So as you're thinking about rebalancing your portfolio, maybe take some of the run up that you've had there and start to apply it elsewhere to diversify your portfolio.
All right, we'll leave it there. Brett, thanks so much for sharing some insights on the international markets.
Appreciate it.
That's Brett Shealy, head of ETF Specialists at AllianceBernstein.